Hello, this is a presentation of the California Escrow Association. In this session, we are going to talk about the state of California's Real Estate Withholding Act, what it is, how it affects our desk, and what we as settlement agents need to know. First of all, the disclaimer. The information contained in this presentation is only intended to provide a guide in the various transactions to which the information is applicable. No representation is made as to the legal validity of the information or the adequacy of it in any specific transaction. The information contained herein should only be used after consultation with the management of your company and with legal counsel. The state regulations regarding withholdings on real property sales is a little different from the federal withholding known as the FIRPTA. For the state, the law is written such that all real property being sold requires the payment of tax in an amount equal to 3.33% of the sales price. This amount is withheld from the seller right in the escrow transaction and sent to the Franchise Tax Board at closing. The amount is considered a prepayment of income taxes on the potential gain. There are, however, certain withholding exemptions, and those can be found on California's 593C Real Estate Withholding Certificate. Exemptions that can be claimed. If the sale price is $100,000 or less, the exemption is automatic. If the seller has used this property as his principal residence at least 2 out of the 5-year period right before the sale, this is another exemption. The seller is a California corporation, limited liability company, or partnership that is not a single member entity and which is registered to do business in California. The seller can claim a loss or zero gain on the sale by filling out Form 593E, called the Computation of Estimated Gain or Loss. A 1031 tax-deferred exchange transaction. If the seller is doing a 1031 tax-deferred exchange with the property, then he can check one of the boxes on the 593C form. However, if he does not conclude the exchange, or only part of the funds are used, then the withholding will still have to be done. Installment sale transactions. This is a different exemption, and it only goes so far. If the seller is carrying a loan for the buyer, then the part of the funds that he receives at the close of escrow, which is called the first installment by the Franchise Tax Board, will require the withholding of 3.33%, and every time the buyer pays the principal on this loan, he will have to do the withholding on the principal paid and send that amount to the state. The buyer must also complete and sign Form 593I, which is called the Real Estate Withholding Installment Sale Acknowledgement, at close of escrow. If the parties decide not to withhold and pay on a monthly basis on an installment sale, then the settlement agent will pay the full 3.33% at close, and the seller must declare the full sale on his next tax return. Plus, he needs to send a written request to the Franchise Tax Board to release the buyer from withholding on the installment sale payments. With the exception of item number 1, none of the exemptions are automatic. The settlement agent will be providing the seller Form 593C to be reviewed, completed, and signed. If the seller can check any of the boxes on the form under penalty of perjury, then the transaction is exempt. Here are a couple of questions that get asked. Can I submit a lower tax amount? The standard withholding is 3.33% of the sales price. However, the state will allow the sellers to calculate and submit 12.3% on the gain amount for an individual or 13.8% for a corporation. In order to withhold on this lesser rate, the seller must complete Form 593E first and hand this form together with the 593 to the settlement agent. Another question: do I need a tax ID number? One of the important aspects of the 593C form is that if the seller is able to check one of the boxes on the form, but is not able to provide a social security number or a tax identification number, then the form itself is void, and the full withholding and payment of the 3.33% tax is automatically required. This means that a foreigner who uses the property as his principal residence must have a TIN number in order to qualify for the exemption. This TIN number can be obtained by submitting Form W-7 to the IRS. We will require this TIN number by the time we close escrow, as it takes 6 to 8 weeks to process. You should really caution your clients that they must have this TIN number before you can close your escrow. How do you get your money back? The tax amount must be sent to the state within 20 days from the end of the month in which the transaction closed. The amount sent to the Franchise Tax Board is a prepayment of income tax due on the gain. To get the money back, the seller must file their income tax return at the end of the fiscal year and include a copy of the 593V form, which the settlement agent provided at the closing and was used to remit the tax amount. If the funds sent to the Franchise Tax Board are more than the tax liability for that year, the Franchise Tax Board will refund the difference. Whose responsibility is it to make sure the law is followed? Unlike the federal FIRPTA laws, the responsibility for the obtaining of signatures on the correct state withholding forms and the sending of the amounts to the Franchise Tax Board fall on the settlement agent handling the sale. It is the seller's responsibility, however, to complete the forms correctly and seek independent financial and legal counsel. As the forms state, title and escrow persons, exchange accommodators, are not authorized to provide legal or accounting advice on the withholding amounts. Audits. Yes, the Franchise Tax Board does audit settlement companies to make sure that the regulations are followed. Finally, attached are copies of the following withholding forms: the 593C, the 593E, the 593, the 593I, and the 593V. On the 593V form, the part regarding when the payment should be made is highlighted, and there is a statement that was typed in as a hint for settlement agents. Penalties are charged to the settlement agent as a responsible party, so make sure that the process is done correctly within the time period required. The settlement agent should also calendar 2 weeks after the check is sent to make sure that it was cashed. For further questions regarding the state of California's real estate withholding laws, you can go to the following link. Please note that the state regulations can be changed from year to year, and it is important to review the most up-to-date information on the FTB website. We hope this presentation has been of value to you. If you haven't done so, please look for our other presentation in which we deal with another issue regarding withholdings, this one for foreigners under the Federal Foreign Investment in Real Property Act, the FIRPTA. Thank you. This has been a presentation of the California Escrow Association.